London-based Jacobi Asset Management has listed Europe's first spot Bitcoin ETF roughly a year after its planned launch. Joining us now to discuss is Jacobi Asset Management CEO Martin Bednall. Welcome to the show, Martin.
Hello. Thanks for having me.
Good to have you here. Let's talk. First of all, congratulations. It feels like something to really celebrate when we talk about spot Bitcoin ETF approvals these days. Talk to us about what's been going on in the past year. Why is this finally being listed now?
Yeah, so when you are the first to do something, so as you say, it's the first spot Bitcoin ETF to be launched in Europe, and it does take some time. Regulatory approval is one step, but there's plenty of other steps to look at. And I think there's a number of factors that have gone along this journey. The general macroeconomic environment, the crypto market environment were all factors that we considered around timing. But the biggest factor has been what we've done with this launch is we've added a sustainability element to the fund. And what I mean by that is that we have decarbonized the Bitcoin that we hold. So we are ensuring through buying what's called a renewable energy certificate, that the energy usage of the Bitcoin that the fund holds is all procured through renewable energy. And so for us, that's taken a lot of work and working with our partner Zumo to implement that. But it's addressing the environmental concerns around the Bitcoin network. And so, as I said, the energy usage of the Bitcoin network that our fund is responsible for, we've decarbonized that.
And was this a requirement to get it passed? I mean, or is this sort of was this window dressing to make regulators happy?
No, it was not a regulatory requirement. Certainly wasn't window dressing. We wanted to ensure that the product that we brought to market was the best product for institutional investors in Europe. And so that's the market we're targeting. And in Europe, I mean, in the US, I think ESG is a bit of a polarizing topic, but in Europe, it's really got a lot of steam behind it and a lot of support behind it. And through regulatory changes that have happened and regulatory drivers, institutional investors in Europe are really required to look at any investments that they make. They have to look at the sustainability, the ESG side of things. And so we've addressed that. And so part of the core strategy for Jacobi, so it's not Jacobi, it's Jacobi Asset Management, is to have the sustainability embedded within all the products that we look at. So any future products we do will also have the sustainability elements front and center as we have today.
So with this launch, what do you expect to happen with U.S.? Do you expect to see U.S. money coming into it? Are there any restrictions for U.S. institutional money, at least, or even for U.S. individuals into investing in it? And do you think that this will give us an indication of what a U.S.-based ETF would look like?
So, unfortunately, there are restrictions for US investors, and that it is not allowed to be sold or marketed to US investors. We'd love it to be able to, but that is a restriction on pretty much all European products going into Europe, into the US. Does it have any impact in the US? Now, as you know, and the whole market knows, there's a lot of filings with spot Bitcoin ETFs in the US. They're transparent around the filings. I don't see any of them addressing the environmental energy issues that Bitcoin has. Whether some of them will look at our product, see how innovative we've been, and look to implement that, then I think that would be a fantastic endorsement of what we've been doing and the work we've put in. And for me, it's something that they should be doing. We've done it through the conviction we have, and it's also a big differentiator in the product. if all the spot Bitcoin ETFs come to market at the same time in the US, which is talked about by a number of people, that they could all get approval at the same time, I think some of those applications will be challenged in terms of getting assets in. And so they may want to look at a differentiating factor that looking at this sustainability element would bring to it.
Tell me a little bit more about the renewable energy certificates. If I'm an institutional investor and I'm purchasing one of these spot Bitcoin ETFs, how are we ensuring that this certificate is now helping me meet my ESG goals?
Okay, well, the first thing I'll say is that the fund itself is a pure Bitcoin play. So it's pure Bitcoin beta. We hold as an asset of the fund in custody with Fidelity the Bitcoin 1-to-1 for the value of the fund. The renewable energy certificates program that we've got is something that Jacobi Asset Management is managing on behalf of the fund, but it is not paid for and doesn't hit the returns of the fund itself. We take the costs of that, and so. How does that? How the renewable energy market is a tradable market. It's how renewable energy is traded by utilities. So, just to give you a bit of an explanation, if you have a green energy tariff and your neighbour doesn't, you will get the same electricity from your utility provider. But the way that your utility provider can say that they've provided you with a renewable energy tariff is that they will go and buy RECs. They will go and buy renewable energy certificates. So they're buying the carbon attributes of the renewable energy in the grid. So we're not doing the Bitcoin mining. It's what's called a Scope 3 emission for the fund. And we don't know the miners whether they've used renewable energy, what kind of energy they've got. So we make the assumption that there's been none, and we buy these renewable energy certificates, as I said, as your utility company would do, to ensure that the energy usage that we're responsible for has been procured through renewables.
Just a rough estimate, what's the cost per Bitcoin to do that?
So the cost of the renewable energy certificate is a separate market. It's not attached to it. Right. So one renewable energy certificate is 1 megawatt of hours, 1 megawatt of electricity. So the cost depends on that market, and it depends on the price of Bitcoin and the hash rate. But it works out around 30 to 50 basis points, I would, currently, depending on where the market and where they are.
And the investor doesn't see that, you're saying. They're doing it 1-to-1. So and you said it's coming out of Jacobi's other fund. It shows up. Obviously, somebody's paying for it.
So the fund charges a total expense ratio of 1.5%, and
that's part of that.
Out of that 1.5%, we pay all the costs for the fund, and we also pay the costs of implementing this REC program.
About 50 basis points.
Yes.
Okay.
Yeah. So it's a great product for the investors. So
it's about a third of the expenses.
Currently.
Yeah. Okay.
It would depend, as I said, it's a market. It's the separate market.
Right.
It
goes up, down. Exactly.
All right, and we got to ask you, you were at BlackRock for 13 years previously. Do you think they have a chance at this ETF application here in the US?
Well, with the likes of BlackRock coming into the market and doing a spot Bitcoin application, then that just really gives the digital asset market such great credibility when firms like BlackRock come in and make those applications. The SEC are the ultimate deciders of approval from all the applications that are coming in. I think I'm with the market, and it will happen at some point. When is who knows that at the moment. But it'll be exciting. I've never, in all my time of launching ETFs, I've never seen so much publicity, so many stories, so much anticipation for product launches, and that just says wonders for the future of the crypto market.
Martin, thank you very much for joining the show this morning.